My name is Mike Munzing with Munzing Mortgage Group. I'm so glad you joined me for another week. What a crazy week it was. We had the election on Tuesday. And as you can see on the national map, now this is the map after 2008. And as of Tuesday for 2010, that is a lot more red, which is, in my mind, is kind of fun. But hey, I want to ask one quick question here. What happened to California? Are you guys in there? Who was out voting on Tuesday here in California? We did not vote for the marijuana bill, and we voted for Jerry Brown. I have no idea how that could happen. But hey, let's jump into the week. We have a lot to cover. I want to cover the rates. I want to cover what Stephen Thomas has to say. And we have some critical information as to what the feds and the Treasury are doing. Very scary. Rates for the week, still insanely low. Very, very low. And one thing that brings to mind, a number of you are calling me because you've got friends who need to refinance. Absolutely. I can still help with the refinances. Certainly I focus on helping your buyers buy homes. That is how you make money. But if you have any past clients who have a higher rate, something higher than 5%, I can absolutely help them. So give me a call for that as well. But the rates are looking good. This rate sheet is always on my website at www.mikemunzing.com. Print it up, take it to your open house, share it with your buyers and those who come by. It'll be great. Okay, next I want to jump into Stephen Thomas's housing market update. I'll bring it up here on the screen. I have this on my website as well, all the time. Every couple of weeks, Stephen comes out with a great report. He really digs apart the numbers here in Orange County. Let's take a quick look. We are coming into the holiday months, he talks about, and how that will be wonderful for our buyers. The overall buyers who aren't serious kind of fall back. A lot of folks who know that they've had their house on the market, the sellers, realize that maybe they've been overpriced, and with the lack of buyers, they will tend to drop their prices. If they still have it on the market, they are more serious. Great time for buyers, great time to get them out there. Next, we've got the active listing inventory on the market. It's been dropping just a little bit, about 1% in the last 2 weeks, down to 11,425. That could be kind of the trend until the end of the year. Hopefully early next year things will trend up. Finally, the overall demand, as I mentioned right at the beginning of the report, things have died off just a little with the buyers. And finally, as for foreclosures and short sales, that activity has actually picked up just slightly over the last 6 weeks, he says. It's up about 35 homes. Okay, next I want to address, with the help of great economist Peter Schiff, what is going on this week. One of the most critical moves by the Treasury, by the Fed, that they've done in decades, and it's not great. But Peter Schiff, who's a fantastic economist, actually ran for Senate out of Connecticut. He will explain. I'm going to bring on his video from a day or two ago, and he can do this far better justice than I can, but this is serious, critical news. It's not good news, but news you have to know how to react for your buyers, and at this point for yourself. Here's Peter.
Hi everybody, it's Peter Schiff. It is Wednesday, November 3rd, 2010. Look at the news we got today out of the Federal Reserve. The Federal Reserve announced today the details of quantitative easing, or money printing. The Fed said that they're going to buy $600 billion worth of treasuries between now and June of next year. And who knows how many they're going to buy after that, but they announced this plan. Well, why is the Fed buying all these treasuries? The Fed is saying that they're doing it because they want to stimulate the economy, because inflation isn't high enough and they want it to be even higher. You know, this despite the fact that the CRB index of commodity prices hit yet another 52-week high today, and oil is now moving over $85 a barrel, looking like it can go a lot higher. But I think this is a red herring. I think the real reason that the Fed wants to print money and buy bonds is because that's the only way the federal government can sell them. You see, I think the federal government is having trouble selling its bonds. And the market is about to impose a discipline on Fed borrowing by driving interest rates higher. And so what the Federal Reserve is doing is monetizing debt so that the Treasury doesn't have to cut spending, so that it can keep on borrowing without any immediate pain, because the Fed is going to mute that pain by printing money buying treasuries and preventing a sharper rise in interest rates that might otherwise rein the Treasury in. In other words, the Fed is keeping the bond vigilantes at bay so the Treasury can keep running up big debts, which is exactly at odds with what the electorate is telling the country that they want. The people who are elected, all these Republican candidates, want less deficit spending, but the Federal Reserve is what's making it possible for the government to do more deficit spending. Now, part of the irony of it is interest rates surged anyway. Look at the big run-up we had in interest rates after the Fed's announcement. Now, it's my feeling that rates would be much higher already had there been no quantitative easing at all. But because of the quantitative easing, yes, it is delaying the increase in interest rates, but now interest rates are ultimately going to rise much faster and much higher because of quantitative easing than they would have risen had the Fed not done it. And of course, the consumer price index, the cost of living, is going to rise much, much faster, exacting a very expensive toll on the United States, on the average American. And of course, most people aren't going to make the connection between the higher price of food, the higher price of gas, and the quantitative easing and the deficits. But believe me, they go hand in hand. Oh, one more thing I wanted to comment about today. We did get these job numbers from ADP that showed a net gain of, what was it, 43,000 private sector jobs that were created. But the problem with these numbers is that 34,000 jobs were lost in the goods producing segment of our economy. Now, we gained 77,000 service sector jobs, but the problem is we subtracted producers and we added consumers. See, more people are collecting paychecks, but fewer people are making things for the people to buy with those paychecks. So what does that mean? That means a bigger trade deficit, as these new consumers have no choice but to buy imported goods produced in other countries. That runs up our trade deficit, that further diminishes the value of the dollar, puts more upward pressure on prices. We are not going to have a real recovery until we start losing service sector jobs and replacing them with goods producing jobs. We need lots of goods producing jobs. The fact that we're still shedding them shows that our economy is still getting sicker. It's not recovering at all. And the only reason that we're not feeling the pain right now is because it's been numbed by all this money printing and all this inflation. But when that wears off, and it is wearing off, that's why the Fed is trying to drum up another round of quantitative easing, because it realizes that the last stimulus is wearing off and it's trying to inject another dose before we realize how much damage the first dose has done. But all of this is going to work its way through the system. Now, we are going to get the non-farm payrolls number from the government on Friday, and so we'll get the government's take on these numbers. But my guess is that they'll continue to be subpar, we'll continue to lose manufacturing, and I think we're going to have a stronger reaction. You know, gold sold off a bit today. The dollar was down on the day, but I think we're going to see a bigger reaction later in the week, next week, negative for the dollar, negative for bonds as a result of what the Fed has done. And I don't think that there's going to be enough enthusiasm for the Republican victory in the House to offset the damage that is still being done to the U.S. economy by the president, by the Congress that exists, and most particularly by the Federal Reserve.
Okay, I know that was a little bit deep and hard to hear, but we need to know what is going on. My job is to bring you the facts, bring you the news. On a brighter note, next Saturday, not this Saturday, Saturday, November 13th in San Juan Capistrano, I'll bring up a flyer here that's on my website. If you've got kids, grandkids, your family together, this is a wonderful, positive event that I'm involved in. It's called the Constitution and Country Celebration. I'm going to be Samuel Adams, which has now become my favorite founding father, but there will be lots of great things to do for kids. You can see them up and down the list here. It's going to be going from 10 in the morning till 6 in the evening. Just stop by anytime during the day. It's at the historic Town Center Park, right kind of across the way and behind, I think, Swallows Inn, over near the Mission over there. But love to have you come out. Love to have you participate and come see what's going on. It's going to be a fun group, a lot of fun for the family, a great thing to bring the kids to, with lots of American flags and a real patriotic event. We're going to start having a lot more of those, but this would be a great event. It's going to be a wonderful weekend. It's been a really nice week. Got some new buyers knocking on the door out there. I've really started up with some new buyers this week. If you've got some folks coming to you, please have them give me a call. I'm at 949-689-5626. Once again, Mike Munzing, Munzing Mortgage Group. I've been a lender down here in South Orange County for about 21 years. I look forward to working with you. I look forward to working with your buyers. And God bless you both. God bless your families. God bless America. And we'll talk soon. Thanks. Bye-bye.